All right, guys, tomorrow is the big day. We finally get the PCE numbers with personal income and outlays. The market's been waiting for it. The market's been nervous since we got the last one at the end of February. This will be the next thing that tells us a lot more about what to expect for the first quarter's GDP, which rattled the market when it came out at the end of February and went negative, looking like economic contraction. And we're hoping to hear that story gets changed, gets revised to be something that's positive growth, hopefully up above what the Atlanta Fed put in for their gold adjusted numbers. I'll show you that when we look at that. And then also we'll talk about what trading economics has, what we're looking at from there. And then also the CME Fed Watch tool to see what about the rate cuts and how that could be impacted. By the way, I'm going to be sharing with you a penny stock as well, just as a little bit of a bonus, along with some of the other things that I'll talk about with the charts in this, with the overall markets, crypto market, and like I said, that penny stock kicker there as well. And I'm going to be sharing out the technicals for that over at the Discord. Links in the description. Code word cash when you sign up, save you 50% off the first month. Me and other panel experts over there. You can see our technicals, see our commentary, see our trades. Also, there's a breadbot trading tool that's over there as well. And then also AI tools that are there. And I mean, the products, services, endless, advanced charting, you name it. Vibrant community, thousands of members. You guys can be part of it. Links in the description. Let's get into the stuff that I have for you here. So popping this up for you. This is Atlanta Fed. And if we scroll up and I'll do a little bit of a taparoo here, what you'll see for this is the gold adjusted GDP now that you have handling the little bit of the snafu that we had with the gold that caused it to report as low as it did. They think that it's going to come in more just barely positive, up around, I think it says 0.2 up here. There you go. 0.2%. Up from where it was before. We're hoping for better numbers than that. We want to see that we're up closer to that 1 to 2% range. I don't know if we're going to get that just from tomorrow's numbers, but then we also have, if you look down through, go to release dates when you're search Atlanta Fed GDP now, get there, click on release dates, and you can see the different dates going down through tomorrow, the 28th of March, personal income and outlays, and NIPA underlying detail tables. There you go. That's the catalyst that we're looking for. And then we get further March updates all the way down through April. And then on April the 30th, which I believe is a Wednesday, is when we get personal income and outlays at 8:30 or so. And we also start to see what we get for that advanced estimate coming out as well for GDP. Now, mind you, that says 4/29. That's the final day for the nowcast before we get the advanced estimate on April 30th itself. So as that data come in, hopefully those data are influential to the upside, where we start to see the economic expansion start to roll back our way and the market takes off like a rocket ship. I'll show you the technicals in a moment here on the charts for what we're watching for how the market digests tomorrow's information and moving forward. So let's get over to trading economics. I'm going to talk just a little bit about what we saw what we saw today in the trading economics. So we got our final estimate, our final numbers for GDP, revised up just a little bit for Q4. So was 2.3 consensus, came in at 2.4, but the previous was at 3.1. So a little bit of a slowdown, but still looking fairly healthy. No sign of recession there. Now, mind you, it's the Q1 numbers that are really rattling the markets right now. And the four pillars that I had talked about, that I had mentioned, high GDP is what we want to prop up markets. Low inflation, subdued inflation will help prop up markets. Easy monetary policy and a strong labor market. Those four things, when they're in place, the market can just keep on moving in its old bullish direction. And I will tell you that I don't think that we get a significant sell unless we see something catastrophic that triggers it off. So we do want to watch and see. Now, mind you, if the market sniffs out recession, that's going to probably not be too pretty for us. I did just want to point out, as we're looking at these numbers, earlier this week we had, let me see if I can find it in here, the balance of trade numbers that came out. And the number of imports just drastically outweighing what we saw for exports. Well, for gross domestic product, the stuff that's made here, balancing with the import stuff that we bring in, those two, when you subtract those numbers, you get your exports minus your imports. That gives you your balance of trade, and that can drag on GDP as well. And that number did increase when we got the most recent numbers on that. So looking forward into tomorrow, core PCE coming in at 0.3% consensus, personal income 0.4%. So it'd be nice to see strong numbers come out here. Previously 0.9. If we get strong numbers again for month over month for personal income, that's upward pressure for the markets. Personal spending is going to be the huge one. Hopefully we get a strong number there. A strong number there is really going to help us out for what we see for GDP, and then the PCE price index that we see. Hopefully we get subdued inflation numbers as we look across those, and it'd be nice if they came in weaker than the previous month. that we got for year over year and month over month, that we would like to see less inflationary pressure. And if we do see that those strong numbers for GDP, putting in the vote that GDP isn't falling off a cliff the way that we thought it was, that consumer spending seems to be something that's holding out as the consumer makes up about 70% of our GDP, that could be very bullish for the markets. That rips off a lot of that downward pressure and puts some wind beneath its wings, if you will. So what we have here for the CME FedWatch tool, we're at 13% likelihood for a rate cut in May. I think GDP is going to have a lot to do with it. And as we get near that date, if that GDP comes in soft, I bet that's going to change in a heartbeat. The Fed said they're ready to move in whatever direction. So honestly, they're waiting for the results to come in, and sounds like they're waiting for lagging indicators to show, which means they're going to end up on their back foot anyway for this, rather than being up on their toes and ready to move. So what we have, 13% yesterday, that was 12.2. The day before, about 15. A month ago, that was about 26, 27% chance that we were actually going to get a 25 basis point rate cut in May. If we go out to the end of December, what are we looking at? Well, right now, the two highest peaks that we have, 3.5 to 3.75, up to 3.75 to 4, that we get a rate cut. And that's about on par with where it was at a month ago. That would be 2 to 3 25 basis point rate cuts between now and then. If that comes down to be softer without having the signs of recession, that would give us potentially easier to borrow money, easier monetary policy, especially if the Fed stops rolling off their balance sheet and entirely stops their quantitative tightening that they're doing, which they've slowed the pace of quantitative tightening, which is a form of easing, but it's not quantitative easing yet. Instead, we want them to be buying instead of letting the bonds roll off their balance sheet. Right now, we're just not seeing that right now. We want that easy monetary policy. We want that low federal funds rate. We want the lower inflation. We want high GDP. We want that strong labor market. Hopefully without suffering through the pains in the meantime. But I will say that if that pain does happen to be there, meet us over at the Discord. We're trading in either market, any market, you name it. And you can see all the trade wins that pop up when you come over there. Like I said, down in the description, code word cash when you guys are ready. It's there waiting for you. So over to the charts from here to see more of what I'm talking about for the market being just flat out nervous, if you will, for what exactly could be said. So we actually did trade up above the 200-day for SPY just a little bit. Today closed down below the 20 again. Closed yesterday down below the 20, down below the 20 again today. Ready to just drop like a rock if it needs to, but trading up above the 20 is a near-term sign that things are turning around. And that goes along with the Bollinger Bands that we have, which uses the 20-period moving average. I have the 3 standard deviation one up here. We are right around that mean. You can see this whole week, Monday, Tuesday, Wednesday, not wanting to leave that moving average near term, that blue one that you see coming through here, because it wants to be nimble. It wants to be able to move depending on what we see. I think that tomorrow is that big day that we see that move, and I have a trade in place ready to go for that. Posted it over in my expert panel channel. You can go ahead and find it over there. As a matter of fact, the first one that I had set up, I ended up scalping 57% off the call side of that strangle. And so I cashed in on that one a little bit farther out of the money. Just a very, very super aggressive play, but we'll see how that turns out. I think that tomorrow could be that big day that strangle is going to print for me in either direction. I find it hard to believe that we're going to stay right where we're at, unless we get some really mixed data. I think that we might get that polarizing moment tomorrow, and that's why I put some money out there, why I put that trade out there. So with the Qs, what do we see? Once again, still down below the 20-day, just like what we saw with the SPY. They're both down below the 200. That puts us potentially in bearish territory, but not so far away that it's signaling that we're going to keep on dropping for right now. We're still above the previous lows that we got. We need to get back up on top of the 200 to really hold on to that, show it as support. That's going to be the thing that really helps us out with some further bullishness. The momentum indicators, daily, weekly, on either one of these two charts, both down in bearish territory. I want to see that turn around. I'm ready to watch those signals hit, because if they hit, we should have some wild trades coming our way to the long side. If not, if they fall through, we might be able to cash out on some of the downside of that. And mind you, there are even options plays that you can do that in the case that you don't believe that there's going to be volatility, that instead you expect there to be a lot of sideways trading, for example. There's plays that you can do like short straddles, short strangles, things like that allow you to capture the fact that there's very little movement with whatever security that option is a derivative of. All right, I got to jump in here real quickly because when I made the video, I realized I forgot to share my penny stock pick that I have for you guys that I think could show us something very interesting very soon. A lot of bullishness. Here's BBAI, so Big Bear AI. I'll tell you what, it got beaten up for a while. I was in this back here all the way at $1.88 per share, and this thing jumped up over $10 per share. So that's a 5x based on that call that I made going all the way back to what we saw in November. So watch that 5x happen, and it's just sold off over that time, especially being a penny stock, especially watching the AI plays kind of lose favor and everything like that. Well, after this big sell, where do we find ourselves? Just north of the 200-day, and I think that we're getting near what looks like it could potentially be about a triple bottom, that we keep on finding buying pressure right around this area. So let's assume that tomorrow goes super well for us and that the market decides to go risk on. This is one of those stocks, BBAI, I think is what you should be looking at for a bit of that correction back the other way that we want to watch and see what happens. Now, mind you, if the market sells off instead, that would cancel what I'm saying right now, most likely. But I will say that if we go risk on, this is one that I would absolutely have on your radar. It's one that like I said, I've watched it go in the past, and I think there's been a lot of excitement. Plus, we have a bit of a gap to fill going back up to about $4 per share. So that would be about a 25% upside. So I wanted to make sure that I piece this in here, and I'm going to get you guys back to the original programming. So back to it. Enjoy. So let's move on from there into IWM, because you can see even some of the nervousness in here. Once again, what's it dancing around? Just like SPY, just like QQQ, dancing around the 20-day, fearful to leave it. It's holding on to it, clinging to it, because the market's ready to move. The market's ready to go in either direction based off what we see, in my opinion, what the effect is on the GDP estimate, especially through the Atlanta Fed. We want to see that go back well over 1%. If it doesn't, if it fails to do that, if instead it just stays right back down where it's at, it destroys that hope. And the market, I think, is going to trip, stumble on that a little bit, maybe fumble a little bit. So we'll keep our fingers crossed to see what PCE puts out there, and also personal spending. We'll see what we got. So over to Bitcoin, also for the nervousness. Now let me take the EMAs off here for a moment, which I just left this up here just so you can see this red 50-day EMA, which is this part right here that we just happen to be just below. It can't quite get there. And then we have this squeeze coming up. There's some consolidation, if you will, coming down from the top for a long time that you can see on Bitcoin, and then up from the bottom, Bitcoin wants to run. Bitcoin's ready to go. And just right now, that whole question of what risk environment, risk on, risk off, like what are we getting ready to do? Bitcoin's waiting for that question to be answered as well. And I will say, I don't think that Bitcoin drops as much as it did in the past. If it does happen to drop, instead, I think it's going to set up incredible buying opportunities. It's going to put people, if it does drop, to a point where they just feel like they can't take it anymore, that they start cutting their losses and stepping out, and that's when that rocket ship is going to happen, and that can happen with the stock market as well. So that's what I'm looking for if we go to the downside. If instead we flip bullish, I'm ready to go for that. That is a much more near-term thing that I think that we can act on pretty darn immediately and still profit from it. So I'm willing to be nimble here, nimble like the Fed is. I don't think they're going to be caught on my back foot, though. So let's move on to XRP. This is currently the monthly chart that we're looking at. Let's go out to the daily chart to see, once again, you can see the hesitation as XRP is trading, waiting to find out from the risk environment, what exactly is it? Are we going risk off because GDP is terrible? Or are we going risk on because GDP actually turns out to be pretty darn good for us? And I think that if that second thing is the case, then we're going to see this rip up. We're going to see Bitcoin rip up. We're going to see the 200-day cross for SPY, the 200-day cross back up over for QQQ, the 200-day, hopefully reached again. We're well down below that for IWM. That might slightly underperform depending on what we get. Honestly, those pillars for IWM to really, really have its moment in the spotlight and its real time for outperformance and sunshininess is probably after a big, deep darkness, followed by like just that flip to easy monetary policy that absolutely allows spending to go wild, that allows GDP to really, really pump from where it's at, to really bring back the labor market should we get to that point. It doesn't necessarily have to happen that way. There is a cup and handle pattern that I've talked about for IWM. We could potentially see that as well. And then I also showed the bull channel, the long-term bull channel that we happen to be in for IWM as well. And so if you watch my morning video, if not, go back and watch it. Guys, talk to me down in the comments. Let me know what you think about the things that I've said about personal income and outlays coming out tomorrow, about what I said about bullishness, if the market crosses back up over like SPY, QQQ, back up over the 200, what they're doing about dancing around the 20. Are you seeing what I'm seeing? Let me know down in the comments. I'd love to hear from you. And guys, if you want to talk to me throughout the trading day, talk to the other people, the other panel experts that happen to be over at the Discord as well, come on over and join us. Like I said, be a member of just a vibrant, thousands of members over there already. Just the most positive and best group of people that I've ever had the pleasure to be a part of. It's such a community, and I really am blessed to be over there. And special thanks to Stockmo for building such a thing. He's over there as well. You can see his trades, and you can also there's just so much there waiting for you. Everyone there for the same common purpose of reaching financial freedom, and we're there to help you out in that process. We're ready when you are. Also down in the description, if you want to learn about trading, technical analysis trading, options trading, you name it, there's coursework down in the description for that as well. Use code word doctor when you sign up, and check out those courses. I can tell you, having 17 years in the field of education, having my doctorate in education, and with educational technology, instructional technology being part of the degree work and in my career work that I've done, I can tell you those courses are the most solid that I've ever seen. They are very well put together, easy to digest, great to learn from, and there's communities surrounding them as well where you can get that support that you need throughout the process. Guys, thanks for watching. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning. We'll see you next video.